Welcome back, everybody, to Volatility Trading Strategies. So I'm starting off a new running series here, and I've already compiled a pretty long list of topics to get to, so this will be going for a while, and I call it Volatility Lingo. I'm just going to take a term or a concept and break it down as simply as I can. What it means, what it's used for, and what better place to start than something that is central to what we do in the volatility trading world. And that is the idea of contango. So subscribe to the channel if you haven't already. Gently tap that like button if you'd be so kind. And if you do want more help with your investing, if you want to see my exact portfolio and the specific trade signals every day, there's a no obligation free trial on my website you can claim anytime. But let's get into the concept of contango. So what you're looking at here is a website called VIXCentral.com. You'll definitely want to bookmark this one. It's one that I check multiple times a day. This VIX futures term structure here is for August 4th, 2021, just to use as an example. Now, obviously, this is going to be different on the date that you're looking at it, but you can always check VIXCentral.com for the most up-to-date term structure. Now, all of these individual dots that you're looking at are VIX futures monthly contracts. Essentially, market participants can trade these contracts based on where they feel volatility will be going forward. On the far left, we've always got the shortest dated contract. I call this one M1. You may also hear it stated VX1. It's the same thing. It's the front month VIX futures contract. The second month, M2 here, is for September. Then M3 for October, November, all the way out to next April. So contango is actually a very simple concept. Now, how and when to use it and apply it to our trading, well, that's another level, but what it is quite simple. It's when the further outdated contracts are trading at prices above the shorter dated contracts. So this April contract at 25.10 is trading at a price above the previous month of March at 24.675. If April is above March, we say those two contracts are in contango. And you can see the same situation applies right down this curve at every monthly step. Every single monthly contract is trading at a lower price than the longer dated contract above it. This is a VIX futures term structure in full contango through all 9 months. Now, this concept of contango isn't just limited to the VIX futures. Of course, I'm an options and volatility trader, so that's where I always reference it. But several other types of markets will also have a similar looking term structure. Oil futures, gold futures, all of the commodities. There's many places this applies. And contango is just when those further dated contracts are trading above the shorter dated contracts. Now, if we want to get more specific to the volatility ETP trading world, we actually only need to focus on the front 2 months of this VIX futures term structure. Again, I call those M1 and M2, month 1 and month 2. The reason for this is because the volatility ETPs, like all the normal ones you've probably heard of, your VXX, uvxy, SVXY, these products derive their price entirely based on the changing values of the front 2-month VIX futures that they hold, and then how those futures converge to the spot VIX index at expiration. So applying to volatility ETPs, we can ignore all of these futures except those first two. And when you're on Twitter or reading articles from volatility traders, they'll almost certainly be referring to just those first two, M1 and M2 contracts. And again, contango is very simple. It means M2 is trading at a price above M1. That's it. Now, oftentimes you'll hear people reference this contango number as a percentage. They'll say, well, we're in contango at 10%, for example. Let me show you where this number is coming from. So this is the same curve, and remember, we're only concerned with the front 2 months here. As we can see, the M2 contract is 21,756, and the M1 contract is 19,849. These are in contango because M2 is higher than M1, and to get the actual percentage amount of contango is a very simple calculation. It's just M2 minus M1, and then that value divided by M1. This will show us how far above M1 that M2 future actually is, which in this case is 9.6%. Now, this website, VIXCentral.com, has it calculated for you down here. But if you're ever looking at just those values, now you'll know how to calculate how much M1, M2 contango we're actually in. I'll get into a few data points in a second, but I did do a live stream recently where we unpacked a lot of this contango data. If you missed that one, it's definitely worth checking out. I'll leave a link up here for you. But since we're focusing on M1 and M2 contango only for volatility ETP trading, for all you VXX and uvxy traders out there, we can plot the relationship on a graph, and this is what it looks like. And at the time of making this video, the current amount of contango is 10.47%. Remember, that means the further dated M2 contract is 10.47% above the shorter dated M1 contract. And this chart clearly shows that most of the time the VIX futures are in contango. You can see here 83.78% of the time M2 is higher than M1, with the average level, the median level of contango, at 6.39%. So clearly the normal state of the volatility market is for those VIX futures to be in contango at an average level of around 6%. So you may be thinking, okay, I understand what contango is now, but what's the opposite called, and what do we do when that happens? For that one, you're going to have to come back to the next video where I unpack the opposite, which is called backwardation. So if you want to learn how to turn simple concepts like contango into profitable long-term trading strategies, you can head on over to my website, claim your free trial, and see what the VTS community is all about. You may just find it's quite suitable for your long-term investing goals. See you next time. Thank you so much for watching the video. So don't forget to subscribe to the channel and go check out my website right here. There's tons of articles and videos on there, as well as a free trial to join the VTS investing community. What have you got to lose? Come see how I personally navigate these unruly markets. See you next time.